All right, folks. Welcome to this week's Forex commentary. And yeah, here's the dollar index on the weekly time frame. And you know, last week we were talking about DXY bullish, saying the DXY is bullish, and I think one of the things I mentioned was my expectation was for the dollar index to trade higher into buy side liquidity. First would be the previous weekly high, but and then again I said bias is pretty obvious. I mean, it was so obvious because we had huge sponsorship in the previous week, and all I wanted to see is for markets to roll over that momentum into the new week, right? But apparently the markets chose to consolidate and traded deep into the range, okay? Because in an ideal bullish market, once the new candle opens, you just want to see the candle form its low quickly and, pricing the low of the week, probably maybe Monday, Tuesday, or the early portion of Wednesday, and begin running into buy side objective. But last week was pretty different because the market decided to trade return, correct deep into the range over almost 90% retracement, which was kind of like insane, you get. And a lot of folks that would want to push for bullish dollar without waiting for validation and stuff would probably get smoked last week. I'm going to do like a recap from my perspective, right? And how I dealt with last week's price action and the kind of things I was doing throughout last week. And I'm going to talk about, first I'm going to talk about my expectation this week and stuff. All right. So, apparently last week we returned back into a discount, which was the weekly bullish order block. And this happened on Friday. Okay. This price action happened on Friday. And because it happened on Friday, personally for me, when the market was bearish, like Tuesday, Wednesday, Thursday, the only thing that got into my head was look for a Friday TGIF, right? So I was looking to buy dollar index on Friday, which I did on Friday because I knew that, okay, we're going to see the opposite end of the weekly range likely on Friday, plus the market's traded into the weekly bullish order block. So yeah, I did some buying on GBP USD on Friday. Okay, sorry, selling of GBP USD on Friday. So what do I think the markets are likely to do? Well, there's a number of things that could happen because we have different price action across dollar index, euro, and GU, right? So for DXY, the markets failed to trade into this volume imbalance because as soon as the market started selling, because the last week I was like, I wanted to see the market trade into a discount, which would be the previous week's high, or we see the market straight into this consecutive downward candle because we were already in a premium, like market trading into this premium level here. So, and this Friday's candle closed bearish, so it only mean for me that we're going to see the markets just straight into a little bit of discount and make a continuation because the previous weekly candle or the previous weekly close was strongly bullish. Okay, but the market decided to consolidate, return back in the range, and trying to rebalance these inefficiencies because there were lots of inefficiencies from the previous week. We have a volume balance here, we have a tiny bit of gap here, volume balance here, then we have another gap here, then we have a new week opening gap here, which the market in fact didn't trade into. This week, I'm thinking that since we're already coming off of the weekly bullish order block, and on the daily time frame, we already see Friday show sponsorship, right? Friday is coming out bullish. Friday closed inside the range of Thursday's candle. So the only thing that makes sense now is for the markets to at least draw into this upper fair value gap. I don't want to see the markets return into Friday's low. Personally, I don't want to see the market return to Friday's low. The markets can, however, but it's kind of like it's going to be very another complicated week, right? And honestly, well, I'm just going to just not trade currencies if I'm seeing very funny behaviors in currency because I spent majority of last week trading gold and oil, right? So that was what I was doing last week and less of currency markets. But this week, I think currency are kind of like showing something that means they are likely to make a continuation therefore I'm like interested in trading currency market, but I would like it to be at least, even if there's no price action, that's literally, easy, but at least less complicated, right? So that they don't give you wrong and false signals, and then you put on your trade and they tell you wrong, you take a loss, and then you can't go back to trade again and stuff like that. This would be the near-term draw on the daily time frame, but because we are trading the weekly bias, okay, the markets, however, I want to see the markets maybe go through this level here and invert this fair value gap here for buy side, and then we can see markets returning to this high. And however, if markets are extremely bullish, okay, this week, and markets trade through quickly and closes above these consecutive down close candles, well, that's another confirmation for more buy side. So if you manage to get on the trade and market closes through here, you take some partials and stuff, you can always leave some position on, because if we have another change in state in delivery and daily time frame, means we're likely to attack buy side, this low resistance liquidity around here. So now that we're currently on discount, this is like, best level to stack up buy positions on dollar index and, wait for it to expand. Okay, so still bullish on dollar index from the monthly, weekly, and daily perspective. So on the 4-hour time frame, I don't know if there's anything on the 4-hour chart. Okay, not exactly. I don't really have anything exactly on the 4-hour time frame, except we have this down candle, and I don't know how the markets are going to open, right? I honestly don't know how the markets are going to open, but the only level I see here on 4-hour time frame would be this level. Okay, so say we see the markets open up, trade above these consecutive down close candles, okay, that would be the change in state in delivery in the 4-hour time frame. So makes PD arrays within the range a high probability. Okay, if you blend in time and maybe the London New York session, you can always find a very good setup around this level, depending on how the market's open. Now mind you, I don't know how the market's opening, but I don't want to qualify any level within this range yet, okay, because when market trades through here and closes above this consecutive down close candle, we have a key level which would be likely used for a continuation in subsequent trading days. Okay, so this week is like pretty straightforward, and yeah, I said I was going to talk about DXY, how I was looking at it last week. First off, when DXY traded into this high here, okay, I saw price action to be bullish on lower time frame. Okay, so I was long on dollar index, and up until Tuesday-ish, okay, and I added more positions on Tuesday, and that was the London session. The market rallied. I was thinking I was going to take something off here, and market had that position stopped out, and I had to close the initial trade, and I just stayed flat on DXY and went to trade gold. Why I didn't want to go again on dollar index, because while I'm bullish, my expectation initially was for the markets to either key off of this level here or return into a discount. And when I saw the way the markets engineered liquidity here, and markets closed here, and there was this change in the state in delivery, okay, so it only made sense that the markets were going to return into discount to attack sell side here, sell side here. But mind you, I wasn't comfortable going short on dollar index, so I didn't take the other side of the trade, okay, and I was buying gold and selling oil. And yeah, so I just waited till the end of the week to see if we're going to get the TGIF set up, and that's what formed, all right, on Friday. So DXY is bullish, still bullish, and we are currently back at this level here, this consecutive down close candles here. So we're above the auto block here. Okay, we're above it, and we can see the markets maybe open up, make a retest of the same level here. Okay, that's very possible. We can see the markets just make a retest of that level and begin to spool for buy side. Okay, but aside that, there isn't so much to discuss because we're still bullish, and even if we didn't see the market trade higher last week, that doesn't mean bias is cancelled, because it will take the markets to run this low for me to switch bias currently. Okay, so I'm heavily bullish on dollar index, and last week wasn't just, they weren't having it. Come on, everyone knew it was bullish. What would you expect? The markets will either consolidate or, maybe everyone's wrong. It's one of those two things. And that's why I was like, everyone should be careful because bias is obvious. And when bias is obvious, it's never always easy. It's either everyone is wrong or they hold the market into consolidation and, nobody makes money. All right. So, Euro USD, unlike dollar index, I want you to see something on the weekly time frame. If you look closely here, this was the close of this week's candle. It opened low, it closed high, and this week, just it opened lower. So there's like a gap here. So that gap is what I'm calling the volume imbalance. And on the daily time frame, we saw the markets trade into this volume imbalance on Friday, and markets began to spool. Okay, very incredible. And you see the markets are back below, this consecutive uptrend candle. Okay, this is the bearish order block or the propulsion block, whatever you want to call it. So, and we have that. All right, and on the 4-hour time frame, the market has validated bias. Now look at all of this consecutive uptrend candle. This is a change in the state in delivery. Now about Monday's trading, there are about two levels put into consideration, because the first one is, we have all of this consecutive down close candle, this one here, these candles. I'm factoring the low of the candle, including the bodies of the candle, but I just prefer the low. You can eyeball the bodies of this candle, and if I anchor it to the 4-hour time frame, I want you to see something. Okay, this isn't so much, because there are about two ways this market can play out. Okay, you can see this overlaps this consecutive upward candles, okay, which is the change in the state in delivery. So there are about two ways the markets can unfold. First, the markets can open up, make it consolidate around this level, stay around this level. Then at key time of day, we can see the markets, begin to spool for sell side. We have this fair value gap here, and we still have the consequent encroachment of the weekly rejection block. Yeah. Or we can see the markets maybe redistribute to a premium, and we have a fair value gap here, and markets return into this gap and begins to sell. All that is certain is that we have a change in delivery now, and the 4-hour time frame now aligns with the weekly bias, and that's sincerely what I'm just interested in. All right, so you can be short here, but nobody likes to use this kind of stop loss. Nobody does that. Okay, and or you can incorporate time and price. But if you're just learning and you just want to find consistency, I don't see any wrong in going short here. The only thing is you would have to hold for long-term objectives so that you can balance, you can have a balance of risk to reward. And, currency markets, they are not just going to just fall to objective. There's always going to be back and forth. They're always going to test if you're actually sure of your bias or if you trust your system and what you're doing. So for someone who wants to, increase, risk to reward, they have to work with lower time frames and all of that stuff. So, yeah. So we see the markets returning to volume balance, heavy rejection below key level of resistance, and we can see the markets, just completely run through this gap, taking sell side here, relatively equal, trading into the consequent encroachment of the weekly rejection block. And long term, I'm thinking markets will run sell side here. So we'll just take it one day at a time, a week at a time. Imagine we're bearish, but market spent last week making retracement on the higher time frame, and this kind of retracement can make folks lose bias. And all I just did was, I think the markets are going to return into this inefficiency. Now it's sort of institutional order flow entry drew at the inefficiency, because mind you, DXY didn't trade into this gap, so it's currently leaving it open for a breakaway gap. GU institutional order flow entry drew at this volume balance. And it's a different case with GU, because GU apparently completely rebalanced its inefficiency. You can see this gap here that week. GU completely rebalanced this inefficiency. So you can see while you have bias on dollar index, you understand that each of these markets, correlated pairs and stuff, they will all trade based off of relative strength. Okay, that's just the difference. So you can be bullish on dollar index and you see USD JPY insanely, over exaggerating the move on on UJ, you get, but you're not seeing the same thing in Euro USD, because while the underlying reason for each of their characteristic movement is based on DXY, because if DXY has a bias, they'll all find a way to trade in the direction of that bias, but there would be leadership, and there will be I don't want to call it followership because it doesn't make sense. There'll be lead and lag times between different currencies, because each one of those currencies, have different relative strengths, or they measure differently with respect to the dollar index. You understand? So that's just the little complexity in market. So that's why if you want to trade, you can look at markets that could give you a hint of which one is showing relative strength, maybe if you want to buy, or which one is showing relative weakness if you want to sell. Okay, because if you look at Euro Pound last week, you can see we had lots of, it might be in consolidation, but during this period when it's bearish, if this was last week's price action, if this was let me just put the dividers quickly so I can. Okay, so yeah, so this is last week's price action. So this is Monday. So when we're seeing Euro Pound heavily bearish and we are seeing DXY bullish, like in this case, what we're going to see is that this is Monday. Where is it? Okay, this is Monday, October. I think I was picking a different day. Oh, this is Monday. This was for last week. Okay, so this is Monday. You can see where Euro Pound is bearish and dollar index is showing strength. So it means, Euro USD is going to show us a lot of weakness, and relative to, you can see Monday, GU just stayed in consolidation. Can you see GU stayed in consolidation on Monday because of relative strength? And on Tuesday, you can see Tuesday Euro Pound was bullish, and if Euro Pound is bullish, it means there's strength in Euro, but there's weakness in Pound. But now, what's your bias on dollar index? You want to see DXY go higher. So while DXY is going higher and Euro Pound is going higher, which pair is going to show more weakness? Definitely it's going to be GU. Why is it going to be GU? Because Euro Pound is bullish, and it means there's relative strength in Euro. So Euro will likely consolidate or trade weakly, even if it's going to trade bearish. And GU will just go through levels crazily. So that's just it. Okay, and then we started seeing Euro back and forth, although bearish, stayed in consolidation towards the end of the day, bearish and stuff like that. So then if we now look at dollar index here, where DXY is now validated by saying it wants to return back to a discount. Okay, its interest is returning into the weekly bullish order block, and DXY is now bearish. But you can see in this case now DXY is very bearish. So Euro Pound doesn't implicate much when DXY is very one-sided. Okay, it's only when it's back and forth you can see the effect of Euro Pound, and you can see Euro also traded fairly and GE also traded fairly, because at this point in time DXY is very, very one-sided. But if it's back and forth and DXY isn't strongly bullish or bearish, then they will all trade based off of relative strength. So that's just a little quick lesson on Euro Pound dollar index. And you can see this kind of market is very, very difficult to analyze. Okay, it's very, very difficult. You can only look at it on an intraday or on a daily basis. Okay, you want to look at previous day's high. Okay, it takes out previous day's high. Okay, it's potentially bearish. It took out previous day's low. It's potentially bullish. It's very difficult to look at it from like a weekly perspective, because it's a very insane pair to want to look at. Okay, so dollar index bullish, and we're gonna see what happens this week. So I hope you found this one insightful. Yeah, like, share, subscribe to my YouTube channel. Really, until the next one. Yeah, be safe.